Hello everyone, good morning everyone. So our today's question is the latest exam question from 2024 attempt, December 2024 attempt. So let's start with the requirements. So these are the requirements. It's a comprehensive question. Prepare a report for the board which discusses the issues affecting the establishment of group treasury function in Europe and the impact upon treasury activities relating to the European subsidiaries and the American parent company. So we have done enough discussion in the live classes about this treasury setup. If we want to have a centralized and the decentralized treasury setup, this is not a direct question. This is the indirect way of asking question. So we will read the case, then we will discuss this answer. Second part calculates the impact of undertaking intra-group settlement between Northney and the three subsidiary companies using a tabular format. The intergroup settlement cash flow for the four group companies, 7 marks. Then demonstrate how the transaction with the Japanese customer would be hedged on the basis of information supplied and what the result of the hedge would be. Okay. Demonstrate how the short-term investment would be hedged on the basis of information supplied and what the result of the hedge would be if the interest rate rose or fell by 0.5%. Fifth part, explain why the treasury function might have decided to use currency future and an interest rate collar as a hedging method in part 3 and in part 4. Next, assesses the political and operational risk which may affect the new subsidiary currently under consideration. Then professional marks will be awarded for the demonstration of skills in communication, analysis and evaluation, skepticism, and commercial acumen in your answer. So this is the question. Northney Company is a commercial vehicle manufacturer based in US. So your home country is USA. It has a continuously enhanced the use of automation and information technology in its operations. So this company is uh, more advanced in technology. The reliability of its vehicle is high due to the strict quality control procedure which it enforces. Northrop Company head office and group functions such as treasury and internal audit are based in the United States. However, over time, Northrop Company has established a number of subsidiaries in Europe which carry out production and sales activities. So one subsidiary is UK, let's say I company, F company is in Eurozone, and the P company is in Denmark, which they have different currencies, pound, euro, and Danish krone. North company is looking to expand its presence beyond North America and Europe, and its sales outside these countries are increasing. Okay. Treasury function. North company group treasury function is involved in setting the group overall objectives. It provides currency and interest rate risk management and corporate finance services for the group as a whole, and also deal with other treasury activities of the parent company. The group treasury function is currently based in the head office in the United States and overseen by the group finance director. Okay, staff work full time in the group treasury function office. In addition, each subsidiary has its own treasury function responsible primarily for liquidity and funding management. So the head office has treasury function and all the subsidiaries also has a treasury function. But the overall direction is set by the head office treasury function. Finance director is also sitting in the head office. And staff work full-time in the group treasury function office. In addition, each subsidiary, okay, because more of the Northney company group activities is taking place in Europe, the group finance director has made a proposal to relocate the group treasury function to Europe. Okay. A separate treasury function would be established in the US, responsible for the liquidity and funding management of the parent company. So you are making a group treasury function in the Europe, okay, and another treasury function for the US. That is a proposal. So what is the current status? Try to understand. This is a USA company. This is a UK company, European company, Denmark company. USA has a treasury function. All of these have a treasury function. So your director has given the new proposal. That is, now you will make two treasury function. Group treasury function that will control all the European companies. UK, Europe, and Denmark. And then you have another treasury function that will only control the USA. So you want to shift the group treasury function to the Europe. That will control all the subsidiaries treasury function. So this is a new structure. This is a old structure. You have to compare. You have to discuss this. This is the first part of theory. Okay, next. Treasury activities. In order to increase the director's understanding of the treasury activities, a report is to be prepared which will include an appendix giving examples of intra-group netting between Northney company and its subsidiaries, hedging foreign exchange risk using currency future only, hedging interest rate risk using collar, together with an explanation of why future and collar will have been chosen to hedge the transaction concerned. Okay. Cash flow between the Northree company are managed through intragroup netting using the USD as a base currency and spot mid rate. Owed by these companies have to pay, or to these companies have to pay to these companies. Okay, we have done enough question, we will do it. Settlement will be made in the order that the company owing the largest amount will settle first with the company owed to the smallest amount. It is exactly the same. It is now 1st September 20x4. A Japanese company owes Northrey company 925 million for a sale which has been agreed. So settlement of the contract is due on 1st May. So spot rate is this, currency futures are given. Future contracts mature at the month end, basis can be assumed to diminish to zero. It also assumes that there is no basis risk. It is now 1st September. On 1st February, company is due to receive, so it's a case of investment, 54 billion, which it plans to invest until the funds are likely to be needed on 1st August. The current base rate, so you have a fund on 1st February and you need to invest till 1st August. February, March, April, May, June, July, for 6 months. Current base rate is 3.25, but the prediction in the media suggests that it could rise or fall by 0.5%. Northney company can currently invest funds at a floating rate of base rate minus 30 basis points. The group treasury function decided to use a collar on option. But the problem is, in order to solve the collar, we need a closing future rate as well. So options are given, call and put. Current 3-month USD future price for the March is 96.54. Future and option mature at the end of month. Basis is assumed to be zero. This is same. Northrey company is considering setting up its first subsidiary with sales and production facilities outside the USA and Europe. You want to set up your subsidiary in other country. The group finance director has suggested a country in which the subsidy could be based. This country has a low corporate tax rates. Okay. Which are sustained by an increasing level of government borrowing. Okay, corporate tax is lower, but the government borrowing is higher. This is not that much a good thing. It also has limited employment and workplace regulation. So, regulation is not good. It can also impose some ethical issues. And in future, you may have faced some regulatory issues. It does, however, have regulation relating to the workforce of subsidiaries of foreign parent companies. Okay. At least 75% of the employee of these companies must be home country citizen. You have to employ 75% employees from that country. So you must be facing workforce issues because you have a automated, efficient systems and their workforce may be new. They are not skillful. You have to incur training cost. Okay. You can't employ the foreign employees. Country recently decided not to join a regional free trade area which neighboring countries have established. It is currently in dispute with the regional free trade area over the regulation applied to the import into the trading area from the external countries. So it is difficult for this country to import, and you are going to open a production facility there. How you will manage your production supplies? From where you will import if it is not available locally there? One reason for establishing subsidiary in this country is the demand in the region for robust commercial vehicle of the type which Northney company manufactures. These are needed to cope with the increasingly changeable weather, including more frequent floods. This is also a concern there. Okay. And the problem, if your production is more than your sales, you have to export. If you are not in a free trade agreement, if you are not allowing the import, the other country will not allow you to export your products to the other country. So we will discuss this one. So this was the question. So let's start with the numerical one. Then we will discuss one by one all the theory parts. Right? Regional free trade is like Europe has a regional free trade. One country can do the trading with the other country. So if you have to import from one country to other country, you can do it. There's a regional free trade. There is no taxes on each other. There is no quota, embargo, yeah, anything other customs. You can do the trade with the other country. Okay. If you're not part of free trade, nobody will buy your goods. And you can't sell your goods to the other countries. Okay, let's solve the part B. The netting. Part B. Part B, yes. So I will solve here. So this will be a list of appendixes. This is appendix number 1. Appendix 1. Part 2. Intra group netting. Okay. So let's solve the netting. Let's solve the netting. So let me copy this below just for the sake, because in exam you have a screen side by side, or I can also do here. Then I will copy, okay? So owed by and owed to, okay? So Northney company, then IB Thorpe, okay, then Flexcomp, then Palmer, okay? So let me copy by looking at this. I think everything is correct now, till now. Okay. Now currently let me write all this. Currency. 16.4, 37.42, 40.75, 82.12, 56.98, 72.68, 27.29, 73.79. Okay. These are the mid rates are given. For example, mid rates. Okay. Euro over USD, GBP over USD, DKK over USD, then GBP over Euro, DK over Euro. 0.9627, 0.8320, 6.9418, 0.86 42, 7.2107. Okay. Now I haven't written the currency here, so you have to look at every transaction on the left side. So everything in now USD. This was in local currency. Okay, first one is pound. I need to convert everything in the dollar. So where is the pound? 0.83. This one? 19.71, right? Second one is euro. Right? Third one is euro. Fourth one is DKK. Okay. Fifth one is pound. Okay. Next one is DKK. Okay. Next one is 27 point USD. So it will remain USD. 73.79 is euro. Okay, something is wrong. 56.98 pound. So 19.71, 38, 42, 11, 68, 10.47, approximately 27 and 76.64. Okay, let me write the, I will solve here. Okay, let me copy this and write it here. So don't worry, I am starting from the middle because I have put some numbers above. Okay, so don't worry. Okay, let's make the table here. Now we don't need any information from the question. Let's put a table here. So let me write Northney company, just Northney. Let me copy that. That would be okay. Same. Now let me copy here. There is another way of copying it if it is allowed. This transpose. Okay. So payment by payment, right? Payment down. Receipt, read across. Okay. So Northney company will pay 19.71 million to iBoth. Okay. This one. Then Northney will pay to the Flex company. Then iBoth will pay to the Flex company. Then iBoth will pay to the Pember. Then Flex company will pay to whom? To iBoth. Then Flex will pay to the Pember. Then Pember will pay to the Northney. Then Pember will pay to the Flex company. Okay. Then total receipts. Total payments. Okay. Then let me copy this. Okay. If you able to copy this, then it would be okay. Otherwise, you have to manually shift. In exam. Otherwise, you have to manually shift. How you will manually shift? It will take your time. Total receipts, Northney, iBoth, this one, this. Okay, the best thing is round off all to the two decimal places. Okay. Okay, now take the difference. Receipt minus payment. Okay. So highest payable is Pember. So you will write Pember will pay. Pember will pay to which company? Which is receiving the lowest one. Will pay 34.04 million USD to company and pay remaining amount to Flex Comber company. You have to calculate the remaining amount. Okay. Then Northney will pay 31.29 million USD to Flexcom company. This would be your second part. It's easy, but it is time taking, to be honest. So let's solve the next part. Third, demonstrate how the transaction with a Japanese customer would be hedged on the basis of information. So this was a Japanese transaction. This was. Today is 1st September. A Japanese company owes Northney company 925 million Japanese yen. So that means you will receive the Japanese yen, you will sell Japanese yen on 1st May. We can use the name of the countries as well. So we will receive the Japanese yen and we will sell future, okay? Because contract size is Japanese yen. Spot rate is given, too many future prices are given, but we will choose a June. Nothing is mentioned whether you round up, round off, or what to do. Nothing is mentioned about unhedged amounts. So we can take any assumption. So let me copy this. This is appendix 2. And this is part 3. Okay. Currency future hedging. So amount to be hedged is 925 million Japanese yen. Okay. Sell future June contract. And what is the price? 0.007538. Uh, 0.007538. 7538. USD over Japanese yen. Okay. So now let's calculate number of contracts. Foreign currency 925 million. And contract size 12.5 million. So number of contracts. So there is no rounding off. There is no unhedged overhedged amount. Excellent. So let's calculate the lock-in rate. Let me write the spot rate first, which is 0.007398. 0.07398. Okay. Opening future rate we already written. So total months and remaining months. So we are standing here on 1st of September. We are choosing June contract. So June and difference between June and September. So count the month. September, October, November, December. 4 plus 6. 10 months are total. 10 months are total. And when we are executing the contract? 1st May. So 2 months are remaining. So lock-in rate would be opening future minus bracket start, opening future minus current spot into remaining months divided by the total months. 0.00751. Expected. So receipts. This is dollar over other currency. So we will multiply, right? So it would be 6.94 this. So this is the answer. Super easy. Now appendix 3. Part 4. Collar. Interest rate collar. Okay. Let's read it again. Today is 1st September. Amount is $54 million. Today's rate is 3.25. Currency can increase or decrease by 0.5%. You can invest at base rate minus 30 basis point. These are the options. And future rate is 96.54. So let's do it. Investment amount 54. Okay. Today's spot rate. What was it? 3%? 3.25. Okay. There are two scenarios. Scenario number 1 and scenario number 2. We will do that. But before that, let's have a let's select the collar. So number of contracts are 54 million. What is the contract size? 1 million. Let me write the contract size first. $54 million divided by 1 million into duration of loan. Investment 6 months divided by 3. So number of contracts are 108. Okay. Perfect. And set up the collar. It's a case of investment, so we will sell put option, buy call option. Okay, put will be available 96.25 and call is available 97. So this is 3.75%. This is 3%. So premium. On call, we have to pay the premium 0.492. 0.492. Okay. The put we will receive because we are selling the put. 0.356. 356%. So net is a cost. So net premium cost. You can write in this way. Okay. Net cost. Okay. You can also ignore the sign. You may remove the sign as well. And just take the simple difference. So you have set up the collar. Now you need to calculate the closing future price just to compare. So let me do it in the working, or you can also do above. Closing future price. So spot is given 3.25. Okay, now let's two scenarios. Future spot is given. Scenario 1. Scenario 2. In scenario 2, interest rate will rise. So what was the interest rate? Scenario 1, 3.25. It will move to 3.75. Closing spot or future spot. It's up to you what you want to write. %0.5. Okay. Other is decreasing in 0.5%. Okay. Let's calculate the months as well. Total months. And remaining months. Today is 1st September. And you have chosen March. September, October, November, December, 4 plus 3, 7 months. And you are borrowing on, investing on 1st February. So 2 months are remaining. Total months are 7. 2 months are remaining. So closing future price. Closing spot plus opening future. Opening future is, what was the opening future? It was given in the question. What was the opening future rate, guys? 96.54. 96.54. So this is 3.46, right? 3.46%. So we will calculate the closing future price in both cases. This is current spot. So formula. Closing spot plus bracket start. Opening future minus current spot into remaining months divided by total months. 3.81. Right? Okay. In this case, closing spot plus bracket start opening future. Rest of the formula is same. You can copy even the rest of the formula is same. 2.81. Right? Okay. Now let's do it. Set up the collar. We have already set up the collar. Let's compare the collar with closing future price in both scenarios. So scenario number 1 and scenario number 2. So let me write two things from below, from scenario number 1. First of all, let me copy the closing future in above. Okay. You have set up the collar 3.753%. Interest rate moved to 3.81%. So what will happen? Put will exercise. Anything above 3.75 will be exercised. Anything below 3% will be exercised. Anything in between will not be exercised. So when you compare the closing future price 3.81 with this collar, put will be exercised. Put option will be exercised in scenario 1. So there is a loss. There is a loss. 3.81 and 3.75. You can convert it into the text as well. It's up to you if you want to do in a tech way. Otherwise, it's up to you. So it's a loss. Otherwise, you will do in this way. Number of contracts into contract size into this loss into multiply. What is the duration of the loan? 6 by duration of the loan 6 by 12. Okay, you can this way. Is it correct? I think we have to multiply with 3 by 12, right? 3 by 12, yes. Yes. Okay, what about the scenario number 2? Scenario number 2, when you compare this 2.81 with this, so call will be exercised. When you compare 2.81 with this, who has the call? We have the call. Call will be exercised in scenario 2. Okay. And there would be a gain. 3 minus this. So into 108 into 1 million into 3 by 12. So this is your gain 0.513 million. Okay, you can do this in this way. Next is the effective rate. So your actual interest income. So actual interest income is closing spot minus the basis point, 0.3 basis point. It was written that you will invest at 30 basis point lower than that. 30 basis point. Okay. And you have to face the premium cost. and there is a loss. Here there is a loss. So effective interest rate is this is the income minus premium minus the loss 3.25. And in second case, actual interest income is closing spot 2.75 minus 0.3%. Okay, the premium would be same, but there is a gain here 0.19. So 2.45 minus this plus this 2.50. So if interest rate rises, your maximum income will be 3.25. If interest rate falls, you will secure the minimum income at 2.5% level. Okay, 2.5% level. That's how you will do it. There is another way of solving this question. Do not solve side by side. Solve the scenario number 1, then scenario number 2. How? Let me do it. Let me do it. Okay. Solve the scenario number 1. Set up the caller combine, then scenario number 2. 1. What is scenario number 1? Write it completely. Rising 0.5% increase in interest rate. Okay. That is scenario number 1. Calculate the closing future price. Okay, calculate the closing future price. And do this, then do the scenario number 2. Or there is another way. That is right here. Sell put, buy call. 3.75, 3%. Now compare the future price with both. Right here. Exercise. Now compare it with the put option and call option. To be honest, this you have to compare with both. If closing future price is above than this, then you will exercise. Yes. Gain. Okay. That's how you will do it. Then you will solve this. This is your effective income. Then make the scenario number 2. Let me solve the scenario number 2 for you. Copy this again. Put here. Scenario number 2. 0.5 decrease in interest rate. Strike price, closing future. By the way, closing future will change here, right? 2.81 in both cases. Okay, excise or yes or no. So you will compare 2.81 with both. So if 2.81 is lower than the 3%, then you will excise. So it's a gain here. Okay. Multiply this gain with 108 with 1 million into 3 by 12. Then actual interest income. What is the actual spot rate now? 2.75 minus 0.3%. Then copy the premium from above. Then copy the gain from above. Okay. So actual interest income minus premium plus gain. 2.5. This is more presentable. We can say that. But you can also make side by side. You can also do in this way. Okay. And one more thing. You can also do the working of each case after its heading. Okay. This is more presentable. Right? Okay. Now let's move to the next part. Explain why the Treasury function might have decided to use a currency future. And interested caller is a hedging method. So let me open the Word file. We are done with numerical. Okay, let's move to the question. So now let's make a report and write everything in that report. Okay, report to the board of directors of Northney company. Report to the board of directors of Northney company. Okay. So now the first heading, introduction. In present tense, this report covers the covers the covers the proposal of relocation of group treasury function to Europe. It also covers the it also covers the currency and interest rate risk hedging cases and justification of the use of given methods. It also includes the discussion on political risk, political and operational risk of setting up a subsidiary in new region. Okay. Now you will discuss one by one. So let's discuss the first question. Discuss the issues affecting the establishment of the group treasury function. Issues affecting the establishment and the impact upon treasury activities. Issues affecting the establishment of group treasury function. Affecting the establishment of new treasury function in Europe. Okay. Northney company currently has a has a treasury function set up in USA, and each subsidiary has also set up in their respective location for liquidity and funding management. Right. It is a new proposal to set up a group treasury function in Europe, and other in USA. Setting up new function, new function in new location can create few problems, like it will increase the cost. It will be time consuming. It will be burdensome on company to hire new employees or to give extra allowances to existing employees to move there. Okay. Current is kind of a decentralized. Now they are moving to the centralized only in Europe, only in Europe. So it is better to expand treasury operation, treasury function in one of the subsidiaries. Instead of opening a brand new office somewhere else, you can expand one of the treasury function in one of the subsidiary region. It will save time and efforts and less need to hire employees. Okay. If Northney company opens a new office at new location, Northney company will face recruitment challenges and existing employees may ask work from home, as currently culture is to do culture is um, what we call it, in house. Culture is office based. Okay. Other challenges can be uh, what we call it, time zone issues, maybe language issues in Europe, because no, everybody can't speak English there. There were different languages there and different jurisdiction as well. Okay. It will also a issue for Northney company that who will control the Treasury function. Where will director of Treasury will sit or report? As group Treasury will be in Europe, so director will move Europe or control from USA. Is also an issue because USA Treasury will become smaller. So where will the where boss will sit? It is also an issue. Other issues. Other issues can be now autonomy of subsidiaries. Autonomy of subsidiaries will be over. Will be over. And there may be issue of delay delay in decision making. Central Treasury may not be aware of all local regulations of reporting countries. Okay. Another issue is as group Treasury will shift to Europe, who will control parent company Treasury? Okay. Whether it will be under the group Treasury or independent. If it is under the group, its autonomy will be over. Just imagine, parent company will take direction from the parent company is in USA and that will take direction from the European company. Autonomy will be over. And if it is under the group, then there will be duplication of work. If still it is under the group treasury, then there will be a lot of duplication. Okay. So I think I have written enough. So I have addressed two parts of issues affecting the establishment of a new treasury function in Europe and its impact. And the impact. Okay. Then you will discuss the next part. I think next part is of numerical. Second part is numerical. Third part is numerical. Fourth part is numerical. Fifth part. Explain why the treasury function might have decided to use currency future and interest rate collar. 4 number. Why treasury function decided currency future and collar. Next heading. Methods of hedging. Okay. Then the next is political and operational risk. Political and operational risk. And then you will do the conclusion. And then you will write report prepared by and date this. Okay. Now you will discuss why you have selected the future contract. First of all, future, currency future. A paragraph on the currency future and the collar. It's very easy. It's super easy. Although you will write that Northney company has selected currency future maybe because of the following reasons. Number one, currency future is readily available in the market. It's a liquid contract. It does not have any counterparty risk, default risk. And it's very easy to get and close the contract. Although the calculation of forward and futures are not available, but probably this would be the best available method. That's why Northney company has selected this. However, there are certain issues with the future contract. Number one, future contract may face the basis risk. The effective rate which we have calculated may not end up as the same because of the basis risk. Second, in future contract, company have to arrange the margin requirements. Although it is mentioned that there is no margin, but practically there is a margin contracts. You have to deposit amount and you have to continuously fund that amount. Okay, you will write one paragraph on this. Then you will write one paragraph on the collar. Okay, what is that collar? You will write that what is the reason of choosing collar? The reason of choosing collar is company may not directly enter into the option contract because option contract can become extremely expensive. You have to pay the higher premium cost in advance. The collar is less costly compared to the option because in collar you will take two positions, one to buy the option and second to sell the option, so your overall premium cost will reduce. Second, in collar you still have the option to enjoy the market rate if market moves in a reasonable band. which is not possible in future and forward contract, because in future and forward contract, you have to honor the transaction. So that's why Northney company may have selected the collar contract. However, collar contract is not that flexible compared to the simple option, because in collar you are range bound and there is not enough information available in the question. On the basis of that, we can say that collar is better compared to all others, because all other information is not given. And then you will discuss the political and operational risk at the end. So in order to discuss the political and operational risk, you have to open this paragraph, the last paragraph. You will say that by opening subsidiary in this country may be apparently lucrative for the company, but it comes with a risk. Okay, what is that risk? You will discuss number of risks here. First of all, political risk. What is the political risk? Political risk is according to the scenario, company has a specific regulation about the employees. You can't hire foreign employees. You have to retain 75% of the local employees. And in future, if you open a subsidiary there, maybe the government changes and government impose more restrictions. Like currently I'm in Saudi. So in Saudi Arabia, there is a law that in banks, you have to hire only locals, Saudis. So if you want to open a bank here, for example, your bank is very famous in Pakistan or India, and you want to open a bank here in Saudi Arabia, you have to keep in this mind that you have to hire almost 100% employees, which should be local Saudis. So what challenges you will face? If you are shifting your bank from Pakistan or India or Bangladesh to Saudi Arabia, if you bring your own workforce, you will bring at a very cheaper rate. You have to hire expensive workforce from here, and that workforce is not trained. You have to provide the training, and that workforce is not trained according to your work ethic culture, your norms, your according to your company's policies. That is not trained. You have to face that risk. Second, if you open the subsidiary in this country, the country mentioned in the question, so the problem is you may face the issues of moving money out of the country. You may face issues regarding the import of the parts, because your company is making cars. If the raw material is not available in Northney, in that particular country, you have to import from abroad, but there is import restriction. If you want to export to other countries, you can't export because there is import restriction, export restriction as well. So it is not mentioned that there is an export restriction. If you are not allowing import from other countries, how other countries will allow import from you? This is also an issue, right? Okay. Then this country has a higher level of government borrowing. If this government borrowing keeps on rising, there is a chance that the government face fiscal issues. What fiscal issues? There can be two issues. If there is an extreme high level of debt in your country, either government will increase the taxes. You will face the issue. or government may raise the interest rate, you will face the issue. Okay. Then you will write the operational issues. Operational issues is related to above all. Because of the regulation on the workforce, you can't. It will be difficult for you to hire local trained employees. Okay. You need to set up a plant there. It is difficult for you to import the plant. And the major operational issue, weather is extreme there, floods, threat of floods. So if you somehow open the subsidiary there, if in case of flood, you can face a severe issues. So operational issues are related to employees. Operational issues are related to these floods. Operational issues are related to the import and export. You can write these. And then you will write the conclusion. Conclusion is very simple. Um uh, Regarding the currency and interest rate, that is very okay. And you can about this last thing, you will say that company should consider other factors and do the detailed analysis before shifting the subsidy to this new region. Okay. So you will write four conclusion. Number one, company should consider other factors in relocations, or company should do a detailed analysis before shifting its group treasury function to the Europe. Okay, then you will write that company should also assess other derivative techniques before deciding on the future and collar contracts. In the last line, company should do a detailed analysis before shifting to the new country. Company should assess the impact of the risk before shifting to the new country. Okay. So you will write your comments here. Methods of hedging, political risk, conclude. And remember one thing, there is no solid one line answer. It's a subjective discussion. You can discuss your thoughts, whatever coming is into your mind. But do write. Don't keep the things in your mind. Express yourself in the answer. Okay. That's how you will do it. Okay. Appendix number 1. Okay. You should write the comment that which company will pay to the other company. Okay. Write the comment here in the Excel. Lock-in rate is okay. This is very good. Mm. This is okay. Take size into number of contracts भी आएगा ना. This is the answer. Into number of contracts भी करो. This is correct. Excellent. Okay, जी. This was good. Hmm. What is this? Seems like hedging. Oh, bhai, देखो. Always round off it to the 2 decimal. Round off to the 2 decimal. ऐसे. दूसरा क्या है? E impact on undertaking the intergroup settlement and the strict subsidy. What is this? What is this? Receivable across. Where is payment write down? And what is this? इसको इसके ऊपर 0 नंबर मिलना है आपको. All red for me. That's not. You should not supposed to do this. So you have done nothing. ये तो आपने मेरी जिंदगी पे आसान किया, अपनी जिंदगी पे बल्कि किया. Please don't do this. Palmer will pay. Okay. This is good, but do write the amount as well. Okay. Excellent. 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 There is no need to write this formula. Okay. There is no need to. You will waste your time. Don't write it. Okay. Excellent. Good. You didn't complete the next part. The above parts are very well written. Please complete the part. Okay. Okay. The report. Board of Directors, subject risk management. There is no need to write this. Don't write this. Write this. With the Board of Directors. Okay. This report contains discussion about the risk management, starting with issues affecting the establishment of group treasury function, followed by the calculation of the intergroup settlement as the cash to that. Noted how the transaction with Japanese customer would hedged and okay, excellent. This is correct. One. Affecting the treasury function norms of the US are different than the euro, so there will be difficulty in managing risk that effectively as the group treasury function. Since the treasury function of the European subsidiaries are not trained and experienced in setting group overall objective, group specialists are excellent. The staff that work full time in the USA treasury function may need to be made redundant, and this will entail costs and may create excellent. It may decided that current staff should be shifted to the Europe, but this is unlikely and realistic as employee will most likely not willing to move countries for a relocating and training will incur heavy costs. Plus, they will say we will do the work from home and it will against your work culture. Impact on the currently impact on trainee activities related to impact. What would be the impact? This is the impact which you are writing. It was the same. What would be the impact on the uh, European subsidiaries and US parent company? What is the impact on the subsidiary? They will lose the autonomy. There can be a delay in decision making. Their decision will be dependent on the now on the group. So group doesn't understand the local regulation. And what is the impact on the parent company? Where the directors are sitting in the parent company, but parent company is not a group. It's not a group treasury. So what would be the parent company role now? What would be the role of that department now? You have to write that. You have written here. You have to sell plans to. Good, excellent. You can discuss more because the above discussion is not required at that much. This discussion, majorly discussion was required on this part. This is the first ever subsidy with sales and production facilities outside the years. Good, excellent, good, excellent. There is no need of writing this. It is a very good written report, well written report. Okay, this is another report. Okay, good. Hmm. You also have to comment that. Look, these you have comment one paragraph on the future, another paragraph on the collar. You have written only the pros. Also write the cons. That although examiner has selected future based on this, however, future has some issues. Examiner has, or in the scenario it is given about the collar. Maybe they have selected collar because of this reason. However, there are other issues. Like, however, there are certain disadvantage of the collar as well. Rest, it was a good effort. Okay, this there is another assignment. report. That's it. That's it. Your every new sentence, it's starting with a small capital. Your every new paragraph. Please be careful. Be careful. Come on.